My aim with these weekly Bitcoin update videos is to try and show the growing fundamentals of this asset class with all the developments that are happening in the space, but also fuse that with the weekly indicators that can help understand the spikes of volatility where Bitcoin can have these huge increases where it's double-digit green days, and then it can also turn mean revert and start to have those double-digit red days. And it's just showing that over time, the trend is up and to the right, and it will continue to grow just based on network effects and adoption and the hardness of this asset. But as it grows, it also has these mean reversions where it will spike down. People will be tempted to sell. And so in these videos, I'm going to go through some of the developments that are happening, really important developments that have given me real conviction in where this is going in the long term, but also what the charts are looking like and where, if it's getting overheated, are we starting to get to the point where we're hitting a top in the cycle? So I'm going to go through those same indicators. So let's just start off with some of the growing fundamentals. You can see here that based on the GMI Bitcoin Cycle Top Finder, which is something that's published by the Global Macro Investor, this is Raoul Pal's famous newsletter that he provides in Real Vision, and it's just extremely useful. Julian Bittel, a really great macro analyst, is someone I use for reliability and accuracy when it comes to understanding what's going on in the markets at the moment. And you can see here that we're not even close to spiking through the red line, which is the Bitcoin price, and there's still time for this asset to grow, and therefore it does signal that there is still room. Now let's look at the growing fundamentals of this asset class. You can see here this available supply is that green pyramid. And then you can see how it is basically trying to penetrate this small orange pyramid, which is the available Bitcoin supply. You can see how the available fiat supply in green, which is all of the different currency units, is just continuing to grow. It is absolutely infinite, whereas with Bitcoin, it is a finite amount. And that hardness is what gives it value. And if that hardness is chased by an infinite supply, there is only one thing that can happen to the price of Bitcoin. It goes up. The next one is you can see how it's entered into the top 10 global currencies, which means that it is now starting to become more prominent and more recognized. But you can see here just how small the circulating supply is compared to all of the other fiat currencies. So you've got the CNY, the USD, the Euro. They are just trillions in terms of comparison into the millions that Bitcoin represents. And so that, again, just shows how this supply is so hard. You've got here the total amount of Bitcoin in existence, which is just over 19 million, just under 20 million. You've got the Bitcoin left to mine, which is 1.05 million. You've got the new Bitcoins per day, which is mined by massive supercomputers that use exahashes, and that's only 450 a day. You've got 94.9%, pretty much 95% of the supply is currently in circulation. So there's only 5% of the supply left to mine. As you can see here, this chart's really useful. It shows whole coiners versus non-whole coiners. So you've got the black line is the Bitcoin price. You've got the red line, which is the whole coiners, people who have more than one coin. They can have 10, 100, 1,000, hundreds of thousands. This represents the institutional and very high net worth individuals. But then you've got the blue line, which is those that have less than one coin, which means that these are the people who are in situations where they need to sell. They've got a more short-term time horizon, and that's starting to go down. And as these start to drift away and the gap gets bigger, you can see how this asset is starting to become an asset that is held by those with high net worths. And that's a good thing for the space because these people don't need to sell, which means that there's going to be a maturity in the price, which means that the price is going to start to smooth. The price is going to start to smooth over time and not have these huge volatile up and down spikes. You've got here Trump creating executive orders for digital asset strategic reserve, which means that he's probably going to lean into a Bitcoin strategic reserve, which is specifically just for Bitcoin, not other digital assets. You've then got this digital asset subcommittee led by Senator Loomis, who is extremely articulate at understanding and explaining, communicating what Bitcoin is. And with her involvement and with her being given a position, a prominent position in this administration to start to build the legislation to get the votes to be able to pass a strategic Bitcoin reserve. This is going to ignite game theory, which means that there's going to be no other option for other countries to start to consider. They might have to also get some supply of this asset, otherwise they won't be able to compete. If you don't have this asset, you are going to be at a disadvantage. So this is incredibly important. You've got the increasing growth of states within America that can potentially represent the size of countries because of their gross domestic product. They are huge economies. They're all starting to put legislation in to create these Bitcoin strategic reserves. This is massive because as these states start to announce their legislation, they're just going to continue to grow. You can see here what it looks like, the filing. This act may be cited as the Arizona Strategic Bitcoin Reserve Act, and these are just continuing to grow. There's new ones announced every day, and this is just one example of a small company who have raised millions of dollars and continue to raise millions of dollars to just basically buy Bitcoin and put it on their bank balance sheet. So that means that they've got it as a strategic reserve within their corporation. That's, again, huge, and this is starting to grow. This is just one of hundreds of examples of companies that are doing this. And again, you remember that this asset is so small, so finite, and as it starts to be chased by more institutional money, sovereign wealth funds, you can start to see how there is going to potentially be a supply crunch at some point, and that can only drive the price higher over time. You've got Larry Fink, the founder and CEO of one of the largest asset managers on the planet. He has such a massive influence in financial markets and applying pressure to those that make big decisions on what happens with the direction of money. And so he is starting to say that everything's going to be tokenized on the blockchain, which means that it can be traded, securities can be traded, stocks can be traded, real estate can be traded 24/7 on a blockchain, a public ledger, which can be seen. And the base layer for that, the collateral that will be used for that, will be Bitcoin. And that's, again, massive development. You've got the FOMC meetings. The most recent one is a neutral stance from Fed Chair Powell, which basically there's not going to be an increase in rate cuts, not going to be a decrease in rate cuts. But that most likely sets up the March FOMC meeting for a rate cut, which is what the market is starting to anticipate, that there is going to be a rate cut, which means that as interest rates come down, central banks' interest rates come down, it gets easier. It becomes easier for people to borrow money, and that means that people can start to buy more non-discretionary items, so luxury items, start to consider mortgages on houses, start to buy big-ticket items like cars. So this is massive, and this will also impact risk assets like Bitcoin. Okay, the next chart is the employment level, which, as you can see, is starting to come down towards zero. And as that comes down, it basically signals to the Fed that they might need to start to reduce the rates to make money easier for businesses to borrow. Making money cheaper means that they can borrow more, which means that they can start to source and use that liquidity to increase their workforce. And this is a great graph that comes from Marty Party, an extremely good commentator in the space. This is someone I follow. Extremely good information on macro, finance, crypto, assets, politics, and just basically he's on top of everything. And it just shows the pattern you can see here. As unemployment ticks up, when these two lines cross, you've got interest rates coming down. So if unemployment starts to go up, that is actually bad news. That's good news for risk assets because it means that interest rates are going to start to come down, which means that there's going to be more money going into these assets, such as private equities, tech companies, and then also crypto, which is one of the riskiest asset classes at the moment. So you can see how this graph just signals the direction, the forward-looking direction of what will happen in the economy over the next few months. So here is, again, just the importance of understanding what Bitcoin represents, what it is. It's money, it's scarce, it's uninflatable, it's portable, it's durable, it's international, it's fungible, it's divisible, it's verifiable, it's decentralized, and it can't be confiscated. And there isn't anything else. Fiat currency ticks a few of these boxes, but not all of them. Gold ticks a few of these boxes, but not all of them. And then also housing, real estate ticks a few of these boxes, but not anywhere near as many. So you can see how it is just a superior asset class just based on these metrics. Here are the distribution of the tokens. So you can see here there's 21 million tokens, but actually not all of that is in circulation. 17% of the supply is lost, which means that you could probably consider there only being 15 million, which means that there's even less than what you originally thought. And then this is how it's distributed. You've got Satoshi's wallet, which is 5% of the supply, and that is completely locked away and it will never be opened. So that's again another massive chunk, 1 million coins just completely out of circulation. Companies, you've got ETFs and governments, and these are the Bitcoin that aren't mined. 6.6% isn't mined yet. And then individuals that own the rest. And then here it is again, like this is how Bitcoin has performed against oil, the US dollar, gold, houses. It's just the year-to-date performance of these assets against Bitcoin is just so terrible. And so you just realize that this is potentially the only option to get outsized returns. Let's look at the weekly indicators that signal where we are in the cycle at the moment. And it's just, again, useful to reference each week to see where we are moving and what direction we're moving, if it's a good time to maybe hold investing and wait till there is a correction, or if you're comfortable with that long-term time horizon, you can make an investment at any point, to be honest, because it's always going to be a long-term good decision. Maybe not in the short term, but in the long term it will be. So we've got the MBRV score, we've got the golden ratio, we've got the pi cycle top, and we've got the Mayer multiple. So let's go. So the MVRV score is the market value over the realized value. I use this example each week. It's the imagine if each coin is currently at 105,000, but the aggregate of the coins sold across everyone that holds them is 50,000. You've got a $55,000 profit there. That means that that MVRV score is starting to get high. The higher that profit gap, the more likely it is for people to sell, which means that the cycle is probably going to be starting to get to a peak and it starts to top out. So currently we're at 2.75, and that means that we still have, as you can see with these two red arrows, you can see that when you get into that red area, I'd say that safely, as you can see, it goes down each cycle. At 5 or above, that's when you can start to see it's getting overheated. It's probably starting to spike very quickly, and the price might be going in a very vertical direction at that point. Potentially, hopefully, we'll see. The Mayer multiple, which is the Bitcoin price currently divided by the 200-day moving average Bitcoin price. And it gives you these levels. And as you can see here, you've got a current level of 1.33. That blue line is 2.4. So you can see, again, there's still room for growth with the Mayer multiple. This is not exact science, but it just shows, again, that there is, based on these metrics, based on the patterns of previous cycles, there is still room for growth within the asset if you take this indicator as well as the MVRV score. Okay, the pi cycle top. This is where the 111-day moving average crosses the 350-day moving average. And when these lines cross or they touch, it usually signals, again in prior cycles, if you look at the history of the patterns, that we are at the end of the cycle, and it usually peaks out, and then it has that multi-month to a year correction, which is also very healthy for the market, and it gives an opportunity to potentially have cash on the side to be able to dollar cost average into the asset, because there is always going to be opportunities where there will be better prices, but it isn't always going to be clear exactly when this cycle ends. But this is a really good indicator to see where we are in terms of the sentiment within the market. Are we starting to get too excited? Is there too much euphoria? That's always a bad sign. Okay, final one, golden ratio, which is these bands that are created by taking Bitcoin's price and timesing it by a significant Fibonacci level, so the 1.618. And you can see here that I've removed a lot of the bands. There are higher bands that Bitcoin has touched in the past. But if you just take these two bands, the teal and the slight camo green, you can see how if it was at the end, if it was getting to a toppy place, that currently the price would be 114,000 or 143,000 if you take that top band. It usually touches that camouflage green band. So you can see if you just extrapolate that further, there is still room for this to grow. We've not even touched that first band yet, which means that just again, based on history, it's usually going through that band before it comes back down again. So there's still room for growth here. So how could all of this be relevant? Again, I want these weekly update videos to just be a understanding of the fundamentals, what this asset is, how it's valuable, and then also drip feeding any fundamental developments in the space that could be useful, that could have a massive impact on the long-term value of this asset and the long-term opportunity of investing in this asset. But also just look at the weekly indicators that show where currently the cycle is, where we are with the price. Is it going to go up further or is it going to come down? And again, you can see here, this is a really good, useful website. It's the Cycle Top Indicators, and it's basically all the indicators. You've got so many different ones here. You've got the Pi Cycle Top, the Pure Multiple, the Bitcoin Rainbow Chart. You've got the ETF to Bitcoin ratio. You've got the MVRV score. There's so many different indicators here, over 20, nearly 30 indicators. And if none of those have shown a peak in the cycle, then it's clear that we still have room to grow. And then here, the Institute for Supply Manufacturing, again, usually needs to go over 50 to show expansion. And you can see it's just ticking up, and we're at currently 49 still, which means that there's still so much room for this to grow. This can go up to 55, up to 60, and that just shows a massive macro expansion within the markets. And this is where the top 300 companies are procuring more products for their manufacturing supply chains, which means that there's going to be more people in the economy that want to buy products, which means that they're going to be getting more money, which means they're going to have more discretionary disposable income, which means that there's just a overall healthy expansion within the markets, which means that people have more money to invest in risky assets such as private equities, tech companies, and then at the end of that risk curve, crypto. So I hope this has added some value and just shows the fundamental growth of this asset, understanding that this is something that you should buy and hold for a long-term time horizon, but also understanding why it has these volatile spikes up and down. And it is all based on the macroeconomics. And are we in an expansionary business cycle, or are we in a recession where quantitative tightening is starting to happen? We've got money coming out of the system. We've got money being difficult to borrow. Or are we in a quantitative easing cycle, which is where we are currently, where money is cheaper, there's stimulation from the central banks, rates are coming down, reserve ratios in banks are a lot less, so you don't need to have as much collateral in the bank or deposits in the bank in order to lend out more money, which means that more people can access money. So I hope this has had some positive impact. If it has, like, subscribe, notification bell, drop a comment down below, and I'll see you in the next one. Thank you very much.